Did you know that over 90% of all the money in the world doesn't physically exist? It's not paper, it's not coin, it's just numbers flickering across computer screens. This digital ocean connects us all, from a coffee farmer in Colombia to a tech giant in Silicon Valley. It's the lifeblood of our civilization, shaping our lives in ways we rarely notice. We'll pull back the curtain, revealing the gears that move trillions every hour. Imagine a colossal web spun across the globe. Each strand is a transaction, a promise. With great power comes the potential for both progress and collapse. As we unveil its secrets, we reveal a deeper truth about the world we've built and the future we're creating together. In this grand financial theater, there are key actors: central banks, commercial banks, international institutions, and governments. Central banks, like the US Federal Reserve or the European Central Bank, are the guardians of national wealth, influencing everything from mortgage rates to the cost of a new car. Commercial banks are the arteries of the system, moving money from savers to borrowers, businesses to families. Banks like JP Morgan Chase or HSBC are transnational empires, their health tied to global stability. International institutions, the IMF and World Bank, act as global referees, lending to countries in crisis and funding development. Governments set the rules, collect taxes, spend on services, and issue debt, sending signals that ripple across the world. The decisions made in Washington, Beijing, or Brussels shape the flow of capital everywhere. These players form a powerful quartet, their interplay composing the symphony of the global economy. Each has a unique role, but together, they keep the system running. Their actions affect us all, whether we realize it or not. Understanding who runs the show is the first step to understanding the system itself. Let's meet the architects of our economic reality. To understand today's system, we must travel back to 1944 as World War II raged. Leaders gathered in Bretton Woods, New Hampshire, determined to prevent the economic chaos that led to conflict. Their goal: build a new financial system for stability and prosperity. The Bretton Woods Agreement crowned the US dollar king, pegged to gold, with other currencies tied to the dollar. This created a stable framework for global trade and investment. For the first time, businesses worldwide could trade confidently, knowing currency values were predictable. The system encouraged open markets and discouraged destructive economic nationalism. The Bretton Woods era ushered in unprecedented growth, the golden age of capitalism. Trade boomed, war-torn economies rebuilt, and living standards soared. But this golden age was not destined to last. The very growth it unleashed strained the system's foundation. The rules that brought stability would soon be tested. The next chapter would change everything. By the early 1970s, the world had changed. The US was printing more dollars than it had gold to back. Other countries grew nervous, questioning whether the US could honor its promise. In 1971, President Nixon severed the dollar's link to gold, the Nixon shock. The universal measuring stick was gone. Currencies began to float, their value set by supply and demand. The era of fixed exchange rates ended. Modern, floating finance began. This shift brought flexibility and volatility. Capital could flow freely, funding new industries and opportunities. Currency trading exploded, and banks developed complex tools to manage risk and profit. The financial web grew denser, more powerful, and more abstract. We now live in a world built on promises, confidence, and algorithms, not gold. This new freedom fueled innovation and integration, but also planted seeds for future crises. The system became faster and more complex than ever before. The ghost in the machine was now free, its movements harder to predict. The modern era of finance had begun, and with it, new risks and rewards. How does invisible money move? Imagine a global river system. Money flows as digital information. The SWIFT network carries payment orders between over 11,000 financial institutions in 200-plus countries. When a company in Germany pays a supplier in China, banks send secure SWIFT messages, creating a chain of trust. If banks lack direct ties, they use correspondent banks, major junctions in the global river. Payments hop from bank to bank, each step a secure digital handshake. This system is the hidden plumbing of global commerce, handling trillions daily. Without it, international trade would grind to a halt. But SWIFT is also a tool of power. Cutting a country off isolates it from global trade. The flow of money is both economic force and geopolitical weapon. The river of finance shapes the world in more ways than we see. In our interconnected world, a crisis in one country can spread like wildfire. In 2008, it started with risky U.S. subprime mortgages bundled into complex products sold worldwide. When homeowners defaulted, those assets collapsed in value, infecting banks everywhere. Lehman Brothers fell, panic swept the system, and credit froze. Trust evaporated overnight, banks stopped lending, businesses couldn't pay workers, and layoffs soared. What began in the U.S. housing market became the worst global downturn since the Great Depression. Millions lost jobs worldwide, all from financial decisions made far away. The crisis revealed how tightly woven and fragile the system is. A bank in Iceland could fail from U.S. mortgage exposure. A factory in Asia could close from lost exports. The 2008 crisis was a brutal lesson. Our financial web transmits both growth and disaster at lightning speed. It was a wake-up call for the world. The same connections that drive prosperity can also spread collapse. We are all in the same boat, navigating turbulent waters. The stakes of global finance are real and personal. Understanding the risks is essential for our future. Global finance isn't just skyscrapers and numbers, it shapes our daily lives. When the system works, credit flows. Families buy homes, students get loans, entrepreneurs start businesses, but when it falters, the consequences are deeply human. Food prices rise as speculators bet on commodities, hitting the poorest hardest. Interest rates on loans and credit cards are set by global forces, not just local banks. Your retirement savings are tied to global markets. Crises can wipe out years of work overnight. The emotional toll is immense. Dreams deferred. Uncertainty for millions. When investors pull out, currencies crash and governments cut vital services. The abstract movements of capital become shuttered factories and crowded classrooms. The story of finance is about the well-being and dignity of people everywhere. For all its complexity, the global financial system rests on one thing: trust. It's not gold or dollars, it's the belief that promises will be kept. Trust that your bank balance means something, that payments will settle, that governments won't default. This trust is built over years, but can shatter in an instant, through default, instability, or fraud. When trust erodes, the system seizes up. Lenders stop lending, investors pull back. Financial panic is a crisis of faith, not of money. Maintaining trust is the system's central challenge. Regulations, central bank actions, and international oversight all aim to reinforce it. But trust has been tested, especially after the 2008 crisis. The rise of cryptocurrencies is a response to this erosion, an attempt to build a new system without traditional intermediaries. They reflect a deeper questioning of the established order. The future of finance is a battle for trust. Every law and innovation is an attempt to shore up this fragile foundation. Without trust, the entire system crumbles. We stand at a pivotal moment for money. Digital currencies, tech giants in finance, and climate change are reshaping the landscape. The old rules are being tested. The system must adapt or risk instability. The digital revolution brings inclusion and efficiency, but also new risks, like cyber attacks and privacy concerns. We're building a more complex layer atop the existing web. At the same time, we face existential challenges. How to fund the transition to a green economy. Finance holds the key to channeling trillions towards sustainability. This requires a shift in how we measure risk and value, thinking beyond short-term profits. The story of global finance is far from over. A new chapter is being written now. The system has lifted millions from poverty, but is marked by crisis and inequality. the urgent question: can we reshape global finance to be more resilient, equitable, and aligned with humanity's long-term interests?